Okay, let's unpack this. Canada just dropped its Q1 2025 economic numbers.
Right.
And the headline, well, it was a bit of a surprise, wasn't it? The economy grew faster than expected.
That's right, yeah. The official number from StatsCan was 2.2% annualized GDP growth.
2.2%.
Yeah, and most economists were penciling in something, closer to 1.5%.
Okay.
So on the surface, definitely a beat. Looks like more momentum than folks were thinking.
Right, 2.2 looks pretty solid. But I guess the big question we're diving into today is, does that headline tell us the real story?
That's exactly the mission for this deep dive. We've got your sources here, expert notes, the StatsCan reports, and we're going to look under that headline number.
Okay.
What actually drove that Q1 growth?
Hmm.
What are the different economists saying about where things stand now and where they might be heading?
And crucially, what this could all mean for the Bank of Canada next week.
Precisely. Their interest rate decision is coming up fast.
So you mentioned that 2.2 might be a little misleading. What do the sources say were the actual drivers then?
Well, they suggest the growth was pretty concentrated in specific areas.
Like what?
We saw some strength in things like machinery and equipment investment, also commodities extraction.
Okay.
But one of the biggest factors, and maybe the one getting the most attention from experts like Royce Mendez, was exports, especially exports going south to the United States.
Exports booming.
Yeah.
That sounds good, but I feel like there's a but coming based on these sources.
There absolutely is. Several experts, they look at that export surge and point to something called tariff front running.
Tariff front running.
Yeah. The idea, and analysts like Stephen Brown mentioned this, is that U.S. importers were potentially buying more Canadian goods now.
To get ahead of planned tariffs.
Exactly. So it looked like a temporary boost, right? Driven by anticipating those trade changes, not necessarily sustainable, underlying demand.
Wow. Okay. So potentially just a rush to beat a deadline, not really a sign of fundamental strength. That's a critical detail.
It really shifts the perspective.
And speaking of critical details, what about the other side? Domestic demand. What Canadians and businesses were actually spending and investing here in Canada.
Right. And this is maybe the biggest contrast to that headline number.
Yeah.
The sources show final domestic demand was incredibly weak in Q1.
Yeah.
Like essentially flat. Zero growth there.
Zero. Really?
Yeah. As Royce Mendez put it, the Canadian domestic economy was potentially stalling even before feeling the full impact of tariffs on the export side.
So the engine at home was already sputtering, while exports got this maybe artificial lift from tariff fears. That paints a very different picture.
Completely different.
So what do the experts in these sources think this weaker underlying reality means for the next few months? What's the outlook, say, for Q2?
Well, the consensus among many in these sources isn't exactly rosy. They're generally forecasting a significant slowdown, maybe even a contraction.
A contraction.
Yeah. Tung Nguyen, for example, expects the economy to actually contract in the second quarter. Others, like Royce Mendez, see it continuing to struggle to post meaningful growth.
And what are the main reasons they're pointing to? The headwinds?
It kind of circles back to those tariffs and the ongoing trade uncertainty. That's expected to put a damper on trade and investment.
Makes sense.
Plus, they also anticipate other pressures, like a potential rise in unemployment, households needing to, tighten their purse strings even more.
Yeah, feeling the pinch.
And a housing market that's still pretty lukewarm, not really firing on all cylinders.
Okay, this inevitably brings us to the R word, recession. Do these sources suggest Canada is heading for one? Or are we maybe already in one?
It's interesting. There's actually a range of views here.
Okay.
So while some experts focus more on the struggle just to get any growth, others have a much starker outlook. Tony Stillo and Michael Davenport at Oxford Economics, for instance. Their analysis suggests Canada's economy has slipped into a trade war-induced recession that will last through the end of 2025.
Wow. Through the end of 2025, that's a pretty heavy forecast.
Yeah.
A trade war-induced recession.
It really highlights how differently experts are reading the tea leaves right now.
Absolutely. So, okay, given this complex picture, the headline number versus the concerning details, these recession warnings, what does it all mean for the Bank of Canada next week? What are the predictions on rates?
And this is where you see some real disagreement among the experts cited.
Divided opinions?
Definitely. Some experts, looking at that underlying weakness, the flat domestic demand, they expect a rate cut, a 25 basis point trim. Royce Mendez is in that camp.
Okay, so some expect a cut, but others don't.
Exactly. Economists over at Oxford Economics and also RSM Canada, they actually expect the bank to hold rates steady.
Hold.
Well, they argue the bank has this balancing act to do, right? Weighing the downside risks to growth against potential upside risks to inflation sticking around.
Right, inflation's still a factor.
It is. And even Stephen Brown, who leans towards a cut, notes in the sources that he clearly can't rule out another pause, just given all the uncertainty.
So even those thinking cut aren't totally sure. What about the markets? What are they pricing in?
That's interesting, too. The sources mention that market players seem more convinced of a hold than many economists.
Oh.
Yeah, Stephen Brown points out that interest rate swaps are pricing in about an 80% chance the bank just pauses next week. Hold steady.
80% chance of a pause, according to markets.
Right.
Okay, so let's quickly try and wrap this up. We got this surprising Q1 growth headline, 2.2%.
Yep.
But digging into the sources, it looks like a lot of that might have been driven by temporary stuff, like that tariff front running on exports.
While the domestic economy was basically flat, stagnant.
Right. And looking ahead, many experts are forecasting a slowdown, maybe even a recession, thanks to trade worries and weakness at home.
And the Bank of Canada. Well, they're heading into their decision next week with economists split, but markets leaning towards them hitting pause.
That really captures the core tension here, doesn't it? The headline versus the reality underneath.
It does. The path forward looks pretty murky, with the full tariff impact still unclear, and the bank facing a really tough call between supporting growth and keeping inflation in check.
Which leaves us with this final provocative thought for you, the listener. Considering these conflicting signals, that strong headline versus the shaky details, and experts disagreeing on what's next, what factors do you think the Bank of Canada will weigh most heavily when they make their decision next week? The headline beat or the fragility lurking beneath?